Hello, everyone. Welcome. Thank you for being here today with us. While we wait a few minutes to make sure everyone is here with us to join us, could you please let us know in the chat box where are you listening to us from? And when you do, please remember to put everyone in the chat so we can all read your messages and not only the host and panelists, right? The idea is that we all get to see those amazing answers and see where you are located. And don't be shy. So if you want, I will start. So I'm actually from Venezuela, but I'm based in Miami, in Florida, in the United States. So who want to go next? Okay. Oh, Miami. Pedro. My colleague from here. Ignacio. Welcome. Welcome, Ignacio from Chile. Alejandro Fernandez from Miami. Nice. Oh, Ignacio and Alejandro, remember to put everyone because you have hosts and panelists, so only us can read your messages, not the rest of the audience. Hello, Alban. Hello, Linda from Nigeria. Welcome. Thank you for being here with us today. Mexico, Guillermo, Alejandro, Miami. Janice, Abu Dhabi. Oh, wow. We have a really international class today, Professor. We have Bart, who's originally from Amsterdam, but currently in Norway. Nice. Luis Alejandro from Colombia. Great. I love this audience. From the Philippines.
Wow.
And we have Malawi. Yes, really diverse. Claudia from Peru. Welcome, Claudia. Eddie from Dominican Republic. Wow, we have Latam in the house today. Alexandra from Romania, nice. William from Cameroon, wow. Iran, welcome, Masha. Perfect, so I think that we have almost everybody here. So let me start. So I would like to welcome you to today's Virtual Skills Lab. This forum is actually an online global meeting space offering you the opportunity to skill up and get ahead from the comfort of your home. So for those who are joining a Hall event for the very first time, let me give you a background about us. Hall have designed a school that looks to the future by focusing on developing your leadership skills and building a global perspective that only first-hand experience can bring. If you want to know more information about our programs, please visit our website at hall.edu. And before we begin, let me do a bit of housekeeping. So this webinar is being recorded, which means that in the next few days, you will receive a recording via your email in case you want to catch up and watch it again. You can do so. And this is a masterclass that would last approximately 60 minutes, including questions. And finally, I want to tell you that you can ask your questions at the end. You can either use the Q&A box or the chat box to do them. If you want to do them in the meantime when the professor is speaking, that's fine, but just know that we will take them at the end of the session, around 15 or 20 minutes when the professor is done with his class, okay? And now, without further delay, I would like to hand it over to Frédéric Chartier, who will give a class on crypto assets.
Thank you, Anna. Pleasure to be with you, pleasure to be invited. So let me share my screen. Here we go. And so I am a professor at HALT in Boston, and I've been teaching at HALT since 2007. So it's been almost 16 years now. And I'm originally from France, from Paris, where I grew up, and have a previous career in international banking, and moved to Boston in 2001 to embrace a new career in higher education, which I very much love. It's not the same end-of-year bonuses as working in the City of London, but I love what I do, and that's what counts first and foremost. So today we're going to talk about crypto assets and cryptocurrencies, right? So here we go. So this is a topic that is very popular among young people, among Generation Zs, as we call them. It's technology, it's money, obviously, it's investments, it's very sexy, so to speak, and there's a lot of information, a lot of articles about it. So what we're going to try to do is put it in a more realistic context, right? And try to see where we're going with cryptos, and maybe try to demystify a little bit of what people think about it, right? So let's start with the value. Last time I checked, which was on Monday, the value of a Bitcoin was about $19,000. Okay. Well, seems like a lot of money, but guess what? It's down 72% since November 2021, where it was at about $68,000. Okay. And if you go 1 year back in November of 2020, we were probably around maybe 25,000 and so on. So if you look at a chart over the last 2 years, you can see that we've increased, but in a very volatile fashion, right? Because since May 2022, we're down 36%. Okay, so it's certainly an investment to tread very carefully if you want to consider it as an investment. Total market value of Bitcoin is $0.4 trillion. And if we add up all the various cryptocurrencies, we're about at $1.1 trillion. To put it into context, that represents only 2.5% of the world money supply. Money supply is defined as paper bills and coins in circulation in the world, and all the money people have in their checking accounts and in their savings accounts. Okay, so 2.5% of that, and I could expand it further if I looked in the context, compare it to all types of investments, stocks, bonds, deposits, real estate. Cryptocurrencies represent 0.1% of total world investments. Okay, so that gives you a bit of a context. So what is a cryptocurrency? How do we define it? Well, it's defined as a currency that exists digitally and is created by software. So what that means is that you have no issuer. It is not backed or guaranteed by any person or entity, not by any government or any central bank. It is created or destroyed according to the rules articulated in the code that governs it. In other words, in the software protocol. A digital asset can be traded, right, from account to account. Okay, and what's very important, and this is the crypto part, that every transaction is encrypted and recorded in a publicly shared database, right? So encrypted mean, again, with a software, and you cannot erase it, basically. It's encrypted, which is very important, right, as we'll see later. Its value is determined through supply and demand within marketplaces that we call exchanges. There are several hundred cryptocurrencies in existence. The most popular being, of course, the Bitcoin. It's not the very first one, but it very quickly rose to become the most popular. But there are others. I point out Ethereum, Dogecoin, right? They're traded via online exchange platforms. I mentioned two, the Coinbase platform, Kraken, or through decentralized peer-to-peer transactions. Again, each cryptocurrency is governed by the rules that define it by certain protocols, and they can change from cryptocurrency to cryptocurrency. Okay. Right, so the software is run to record and verify transaction data, and transaction data is bundled into blocks and linked together to form a blockchain. So speaking of blockchain, what is blockchain technology? We also call it distributed ledger technology. So consider that a block would be a large Excel spreadsheet where you record the transactions, the date, the amount, and the counterparties are used with pseudonyms. Okay, so you don't have the real name of the person. They are pseudonyms, often also into some kind of code, okay, to give privacy, right? And that database, that spreadsheet, that ledger, is replicated on many users' computers that we call nodes, and the nodes are interconnected, which call that, hence the term blockchain. They are public. We call that permissionless. Okay, so anyone can create blocks of transaction and participate in bookkeeping. No approval required, no gatekeepers, and that makes your blockchain. So it is the technology, the systematization of those transactions, the decentralization, right, and the fact that there's actually no owner, so to speak. Everybody is potentially the owner of that database, which makes it particularly attractive, as we'll see later. So here's a graph that shows all the features of distributed ledger technology, DLT, right? Programmable, secure, anonymous, unanimous, timestamp, immutable. So you see, you can't erase, right? They are irreversible, cannot be changed, right? Which says a lot about the security and the integrity, right, of the blockchain. So all this is done through smart contracts, which are computerized transaction protocol that execute the term of a contract, right? And that ensures, once again, the integrity and the security of the transaction. Okay, so it avoids the need for a central authority, a bank, a lawyer, a government, and there are a lot of applications, right? We can do very complex transactions, for example, in calculation of interest or exchange of interest for derivative transactions, right? All that can be done much more quickly with practically no risk of mistake, as opposed to human intervention. And of course, it's transparent and efficient. Now, a word about non-fungible tokens, NFTs. You see one in the right-hand side of my slide. This is one of the iterations of the board Yacht Apes, as it's called. It's a collection of NFTs, right? So what is an NFT? It's a cryptographic asset represented as unique information on a blockchain. So once again, it's encrypted, right? Cannot be stolen, cannot be replicated, okay? And it is unique. Each NFT is unique, okay? And it's encrypted, once again, on a blockchain, right? Where it can be transferred from owner to owner through, once again, smart contract technology. Okay, the NFT market and the form that we know best is the art form of NFTs, but there are a lot of other possible applications, right? The NFT collectors market, so this is more the art form, really took off before 2021. It was extremely confidential, and then it took off in 2021. And I think it was helped by the pandemic also in a certain way. $25 billion worth of NFT trades in 2021. In 2022, it slowed down a bit. We started well, 18 billion in Q1, but it went down to 10 million in Q2, so a substantial decrease in the second quarter of 2022. So you see that aside from the pure art form, it's gaining popularity in other applications, such as, for example, individuals' identities, property rights. So you can imagine that passports, perhaps, would be encrypted on blockchains, which would really very much transform the way we travel. Okay. So as I mentioned, a decrease in NFT transactions, which is in line with a decrease in the stock market, which comes to show, as you can see, that most of the buyers of NFTs do it as an investment, hoping that it's going to rise in the future. And only 20% of people surveyed are true crypto art passionates. Famous collections, I mentioned the Bored Apes Yacht Club, but you have also the Pudgy Penguins, as you see at the bottom of my slide here, or the CryptoPunks on the top right-hand side of my slide, right? Those are very popular collections of NFTs. Famous NFT artists, we have Beeple, whose real name is Mike Winkelmann. You see his picture, and behind his picture, you see his artwork, which is an NFT made of 5,000, a collage of 5,000 images, and it's called the 5,000 First Days. And it was sold, that NFT was sold, if you can believe it, this year for the whopping price of $69 million, which is the all-time record. You know, it seems strange to understand in a way that somebody would pay $69 billion for basically an encrypted collage of images, but there you go. And you could say, well, yes, you know, Picasso paintings go for tens of millions of dollars as well. There's no major difference there, right? So other famous crypto artists, we have Victor Langlois that you see here sitting on the right-hand side on his chair. Young, it's actually a teenager, so incredible success. And Snowfro, who did the one in the bottom, right? That kind of zigzag made of different colors. And there again, you wonder how a piece of art like that, particularly digital, would go for so much money. So let's go back a second and look at one of the first created cryptocurrency, which was Bitcoin. It's again the most popular. It was created in early 2009 by someone called Satoshi Nakamoto, and the truth is that we've never seen his or her picture. We don't even know if it's a human being, but there you go. This is the person or entity that claims the invention of Bitcoin. So Bitcoin transactions are pseudonymous, irreversible, and challenging, yet not impossible to trace. There's a limited supply of Bitcoin. Right now, we are at 18.9 million units of Bitcoin in the supply. The maximum amount is 21 million units of Bitcoin, and that is expected to be reached in 2140, so a little over 100 years from now. which is interesting. And we're seeing that that supply increases, but at much lower rate of increase than before. Bitcoins can be also acquired by mining, so not just buying them on exchange. You can try and mine them. Okay, so the miners are those who verify transactions, and as they do, they're rewarded with Bitcoins, right? But it's a very tedious and expensive process, expensive in terms of electricity, and there's some voices raised against that. But you literally have factories of computers lined up one against the other that are working to mine Bitcoins and therefore receive Bitcoin as a reward. So, are cryptocurrencies money? Well, this takes us to the definition of money. Money fills three functions. First of all, it's a medium of exchange. So it is a way to facilitate the trading, the exchange of goods and services. When I go to the shop and I buy a pair of pants, I pay with money, right? It would be very difficult to trade otherwise. In the very old days, people had to literally barter, which is trade a good for another good. You can imagine the difficulty that this entails. So we trace the first forms of money all the way back to 5000 BC, right, in Mesopotamia, showing that quite early in the existence of mankind, people saw the need to create money as they were really beginning to trade, right? So medium of exchange is, I would say, probably the main function of money. Another one is unit of account. What does that mean? Well, it's the role of money as it assigns values to goods and services. So once again, I go to the shop, I'd like to buy a pair of shoes. I see several shoes lined up and I see their prices, right? The prices are expressed in the money that I use here, which is the US dollar here in Boston, okay? And that allows me to understand the value, okay? The one that's $200 obviously is more expensive than the one that goes for 100. Well, which one am I going to choose, right? And price is a big factor, obviously, right? There's not just the only one, but this is where money allows us to assign values to goods and services. And the third one is called store of value. This is the function of money where as we accumulate more money, we accumulate future purchasing power, okay? We are storing purchasing power for the future. And it's obviously very important, right, in our lives because we want to have savings, right? And those savings are very much expressed in the form of money, savings accounts, and so on and so forth. Forms of money, commodity money, that is the original form of money, when money had intrinsic value, meaning that it had itself value. So for example, coins of silver and gold, which were used up until the end of the 19th century, okay, those coins had intrinsic value, right? If you go to the Maya civilization in the 9th and 10th centuries in Mexico and Central America, they were using cocoa beans as a form of money. And you've got lots of other examples of commodity money. More recently, since the middle of the 19th century, we've been using what's called fiat money. For example, paper bills. A $20 bill is merely a piece of paper. But somehow we assign value to that piece of paper, right? So I keep that piece of paper because I know I can use it later to buy whatever $20 can afford. Okay, so here there's no intrinsic value to a dollar bill, but there's trust. That's what fiat means. Fiat is not the Italian automobile manufacturer. Fiat means trust in Italian. Okay, and so we accept paper money because we are confident, we trust in those who issue that money, and we trust that that piece of paper will allow me to buy other goods and services in the future. Current forms of money, well, we have obviously paper bills and coins. We have scriptural money, that's the checks, for example, and we have digital money, right, which is what the most modern form of money looks like. Okay, so if I look at the money in my checking accounts, here I could consider both scriptural or digital money, but more and more it's digitalized. To be successful, money must be scarce, divisible, and widely accepted. And money, right, everybody in society uses that money. Consumers, businesses, financial institutions, financial markets, governments and central banks, and then global markets and institutions, right? So a successful, if a country has a widely accepted currency that is widely accepted not just at home but also abroad, then we have a very powerful, very strong currency. And there's no question that the strong currency is a cornerstone of a well-functioning financial system, and therefore key to a successful economy. Countries that have weak currencies, and by weak I mean not only currencies that lose in value against others, but also who are not widely accepted by their own people. Okay, which is a problem, right? So to have a well-functioning financial system, you need an efficient payment system, and you need financial services that are accessible. Finally, money can be a geopolitical tool. First of all, when in countries who have well-accepted currencies like the United States with the dollar, it increases their well-being because it facilitates international exchange of goods, right? Goods, service, and capital, right? There is trust, there's willingness abroad to accept this currency. This facilitates exchange of goods, services, and capital. Those countries or the people from these countries can borrow from foreign countries, and that is definitely the case of the United States. But also it allows them to impose their economic and even political will. Think of sanctions, for example, right? Sanctions that have been imposed by the United States. I believe it's the only country that I can think of that has ever imposed economic sanctions to a very large extent. So countries that have been targeted by US economic sanctions, more recently Russia, of course, Iran in the past, North Korea, countries who are basically in major disputes with the United States would be, and of course these sanctions can be very crippling because not having access to the dollar, to the system of payments, considerably cripples your activity to trade internationally. Right. So All this due to a very, very strong currency. So back to Bitcoin, let's look at the vision, how Satoshi Nakamoto envisioned Bitcoin. Well, he or she wanted Bitcoin to be a global currency, the global currency, without borders, without financial intermediaries in order to lower the transaction costs, without a government oversight or control, safe and acceptable to all. So back to our question, are cryptocurrencies money? And for the first time, I'm actually going to open this to the audience, right? And see if we can look at some answers. What would based on what we've seen here, would you consider that Bitcoin is money? Right, so I'm going to let Anna, if you're still here.
Yes, of course.
If you could monitor, I think I have 2 hands up, but I cannot see them. So
let me just pull the participants. Okay, we have, yes, we have Goodson. I'm sorry if I did not pronounce your name correctly. I'm going to give you permission to speak, okay? There we go. You should be able to speak now. But you have to unmute yourself. Yes, correct.
Can you hear me?
Yes.
We can hear you. Yeah.
Okay, so is it time for questions? I can ask.
No. My question was, are cryptocurrencies money in your opinion?
So from how you have defined money so far, I would safely say cryptocurrencies are money, because one of the functions of money is as a medium of exchange. So if we are able to buy things using cryptocurrencies, I would safely say cryptocurrencies are money.
Okay, so have you ever bought anything with cryptocurrencies?
No, not yet.
No.
I've never transacted in
okay.
cryptocurrency.
Do you know anybody who has bought groceries or gas or anything with cryptocurrencies?
Not yet.
Yeah, and that's the thing, right? Is that right now, I think it's fair to say that it hasn't really functioned as a medium of exchange. I mean, there's some stores that will accept it here and there, right? So let me thank you, Goodson, by the way, for your. Let me see if somebody else would like to intervene.
Okay, thank you.
So I think I have a few hands up, but I can't see them. So
I will go by, by order. So next is Alban. You should be able to speak now.
Yeah, thank you for giving me the floor. I will say that based on all the facts and all the criteria you exposed to us, cryptocurrencies are not money. They are just a speculative asset.
Yes, I would agree with I would agree with that. Absolutely, right. Most, as I said at the beginning most people who buy crypto assets buy them as investments, right? They're hoping the value is going to go up, right? So the medium of exchange function is not there, at least not yet. Okay, anybody else would like to intervene?
We have Linda as well.
Linda, please.
Yes. Hello. Yeah.
Hello, Linda.
I can hear you.
Okay, regarding if cryptocurrencies can be regarded as money, if we have to go by the definition of money, it should be used as a medium of exchange, store of value. However, at the moment, I would say cryptocurrency is not yet, and it's not considered money at the moment. It's done virtually. So a lot of people buy them for speculative motive, and then they store. Yeah, the people store cryptocurrencies as value.
Yes.
So if we look at the world, the global world, I don't think a lot of people in the world have access to these virtual currencies.
Mhm.
So for me, I think there's a long way to go to develop this cryptocurrencies if they are going to be used as a money.
As money. Yes. That's you're absolutely right, Linda. I totally agree with you. Again, most people will buy cryptocurrencies as an investment, and therefore that's a store of value function, right? So, and this is the only function that so far cryptocurrencies have satisfied. Neither the medium of exchange nor the unit of account. So I know that there's some, a few hip stores or restaurants here and there will accept payment in Bitcoin or other currency, but they are very, very, very few. Okay, so I think it's safe, and I'm going to let somebody else intervene if they wanted to add something to what we said.
We have one more person here. His name is Arturo.
Arturo,
Yes.
please.
Thank you. Well, yeah, the fact is you cannot buy at Walgreens in Georgia with euros, yet euros are money. Also, you can buy euros as a means of investment when you're in a foreign location. So I would say those are not the criteria for determining whether something's money or not. It would be their goal, which is being means for exchange, not their effect.
Here's the thing, Arturo. I actually have an account. I'm from France, so I have an account in euros. And I live in Boston. I can go to the nearest ATM, right? Automatic transaction machine, and withdraw money out of my French account, euro account, in dollars, right? So immediately out of my euro account in France, I can withdraw money here and go to Walgreens and buy whatever I want to buy, right? So my euro, in a way, satisfies the medium of exchange. There's no question that even internationally nowadays, I can use my euro account to travel and pay for whatever I need to pay, whether it's hotel, restaurants, you name it, or even withdraw cash, right, out of my euro account. Of course, the money I receive will be denominated in the local currency, but that still makes euro a medium of exchange. You see what I mean? Okay.
But could you do that with Russian currency in the U.S.?
Well, that's another.
Yeah, but it's still money.
Right. So, money again is defined. Now, of course, you're right. Money is separated into many countries. So if I'm Mexico, right, the accepted money is the Mexican peso, but the Mexican peso is therefore the accepted. It's money in my society, which is defined to be in the country of Mexico. So therefore, but nowhere in the world is Bitcoin, except for very, very few businesses, is Bitcoin accepted. That's my point, right? So therefore, we have to conclude that at this point, cryptocurrencies are not, or not yet, money, right? Because the acceptance is limited.
Thank you.
All right? Okay. All right, I'm going to continue here, and I'm going to keep, please, if you have your hand up, right, keep it for later as we go to Q&A. So, main function achieved so far is store of value, okay? And there's still fear of cryptocurrencies in the world, right? There's no guarantee of repayment. There's no insurance. There's no lender of last resort. In other words, during the pandemic, right, where countries went into recession, the central banks of most of these countries issued more money to feed the economy to prevent it from completely collapsing, right? That's not available in cryptocurrencies because there's no ability to do that, right? No protection against cyber attacks, often associated with illegal activities such as ransomware, difficulty to identify counterparties, and the value is determined only by supply and demand. There's no intrinsic valuation method, right? If I look at the value of any other currency, well, that currency is associated with the economic health of the underlying economy, the inflation, the economic growth, the interest rates, and so on and so forth. None of that is available for cryptocurrency. So that adds to a bit more suspicion, shall we say, or uncertainty attached to it. Excuse me. Governments have reacted, right? Some have banned the use of cryptocurrencies, China, Nepal, Iran. Others have heavy restrictions, no legal tender, banks will not accept them as payments. And some on the other side have declared Bitcoin their official currency, El Salvador a year ago, and more recently, the Central African Republic. Now, to be fair, the problem with this is that you can't just decree, well, now this is our currency, right? Because once again, that currency must be accepted by all the members of our society, as we explained, right? So if you take Central African Republic, which is probably one of the 10 poorest countries in the world, well, guess what? Very, very few people have computers. So how are you going to transact in cryptocurrencies, which by definition are computerized, okay? So I think it's a delusion to believe that you can just decree, well, from now on, we're not going to use, in the case of Central African Republic, the CFA franc, we're going to be using the Bitcoin. It makes no sense. The same thing with El Salvador, right? From what I can tell, the success is not there, at least not yet, right? There's a lot of suspicion, a lot of fear, again, against Bitcoin in El Salvador, and understandably so. Other countries have created their own form of cryptocurrencies. Central bank digital currencies, right? That's the government response. They're seeing cryptocurrencies emerging left and right. Let's create our own, right? Right, and what's the design? Replacing bills and coins, prevent, reduce fraud and criminal activities. And here's the thing, enhance the acceptability of the national currency using a cryptocurrency that inherently is more secure. Okay, increase financial inclusion, counter the rise of mobile payment companies, right? We've got, but here are the downsides, right? That allows governments and central banks to exercise control over private citizen firms, which is completely in opposition with the philosophy of the cryptocurrency as Satoshi Nakamoto imagined it, which was to be decentralized with no oversight, no governments governing these currencies. Okay, it will jeopardize the commercial banking activities, right? But we have some. The Bahamas has the sand dollar. China is piloting the digital yuan, right? With, we don't know exactly how successful that is. But Venezuela has had the petro for several years with, again, very little success, very little acceptance. And that's the key to the success, right? UAE has Encash, and then other countries are looking at it, including the US and the Eurozone. But these two regions have widely accepted currencies. So they're not particularly, how would I say, incentivized to create a new form of money when theirs, the traditional, is pretty much accepted. Okay, so what's the future here? Well, there's no question that in spite of the volatility, cryptocurrencies are gaining momentum. There's increasing demand, more banks and payment systems accept them, more exchange platforms, more businesses. You can invest. Fidelity Investment, which is a very famous, one of the largest investment management companies in the world, creates a mutual fund made of crypto assets, right? So you can invest in that, no problem. Totally legitimate. And this is also the case because some forms of money are being phased out, such as cash and checks. In addition, we have the emergence of fintechs. These are businesses combining financial services and technology, using blockchain, right? And increasing the relevance, therefore, of cryptocurrencies, right? And this is this new world called decentralized finance that emerges left and right everywhere in the world and are sort of a competition to the traditional financial services industry, right? What they want to do is offer financial services and products, bypassing banks and other financial intermediaries, providing cheaper, more efficient services available to all, right? And you can see here the success from 2020-21 from 72 billion to 170, and by 2028 we expect it to top 500 billion, right, in activity. So to conclude, right, there's no question that crypto assets are here to stay, right? And blockchain technology is reshaping the financial services industry. That's also true. But will cryptocurrencies remain as they were originally intended? The answer is probably not. Okay, so now I'd like to open to questions. Thanking you for your attention. So please, feel free.
Well, everyone, as the professor just said, now it's the time to ask questions. So you can do it by chat, put it in the Q&A box, or you could also raise your hand and we will give you permission to speak. Whatever you prefer is fine, okay? Let me see, I think that somebody has, yes, so we have 2 hands raised. So Goodson, would you like to ask a question now? You can just unmute yourself and ask the question if you like, since I already gave you permission to speak. Okay.
You want to give the other person?
Yes, so, and I'm sorry if I did not pronounce your name correctly, Jafet. I'll see that you have your hands up. I will give you permission to speak. Yeah, you should be able to speak now.
Oh yeah. My question is, sorry, good evening everyone. It's evening already here in Nigeria. And my question is, you mentioned forms of money, which is like, we have digital money. And then you said cryptocurrency is not yet money. So how long are we looking at for cryptocurrency to become money? Because in the form of the forms of money you listed, you said digital money. And in this way, I see a lot of companies who are making cryptocurrency as medium of exchange, even here in Nigeria. So also the central bank is looking at it, where Nigeria introduced e-naira. So how long are we looking at for cryptocurrency to become money?
Well, I mean, thank you for the question, by the way, Jafet. It's hard to give a precise timeline, right? What I would say is that it's going to take the time it takes for people to accept cryptocurrencies as money. So again, there's two differences. There's cryptocurrencies like Bitcoin, totally decentralized, not associated with any government or entity. Okay, that's the spirit. That's what a lot of people like, the fact that it's not governed by anyone. But those are, are struggling for acceptance because a lot of people fear of it, because the value fluctuates so much. And so it's going to take, a generation, I would say, for if it has going to have any chance to succeed. As far as the e-naira is concerned, well, it's a cryptocurrency, but in this case, it's central bank currency. So you can see the difference in spirits between Bitcoin and the e-naira, because the e-naira is issued by the Nigerian central bank, so the Niger will have control over that currency. So the purpose of the e-naira is to make things perhaps more secure in Nigeria, right? To limit counterfeit money, for example, that might exist, right? So that would be probably the purpose, and that could take form and shape very quickly, depending on how quickly the government is going to impose it. Okay. Thank you. Anyone else?
We have, I think Goodson has his microphone.
Goodson, you're unmuted. If you want to ask your question, please.
Okay. Thank you. From the discussion, partly, my question has been asked by someone from Nigeria, but you seem, from the discussion, you seem to have inclined more towards the argument that currency is not yet. From the intention of who introduced cryptocurrency, can we safely say in the first place he intended it to be money so that it should be accepted globally as a medium of exchange, or was it on a try and error basis?
So, if I understand your question correctly, there's no question that Mr. Nakamoto intended the Bitcoin to be a full-fledged currency, so therefore satisfy the three functions of money, and be a global currency. That was the spirit, that was the idea. But we're seeing that it is not yet widely accepted, right? And it's certainly not used as a unit of account. So right now it doesn't satisfy these criteria. Will it ever do so? We don't know. Very possible, but not sure. Okay. It's not because you decree or create a currency that it's going to work, right? Speaking of Mexico, which is a country I know well, actually not Mexico, rather Brazil, I beg your pardon. In the 80s, they were struggling with their currency and their economy, and they changed the names of the currency several times. Well, no matter what the name was, it never took off in terms of being accepted. So you have to have your society accept it. And it's very difficult for a government to impose that upon its constituents. I think that's the key. All right. Okay, next question, please.
We have some questions in the chat. Let me read those to you. Wait. Okay, so we have one from Maria Luisa.
Yep.
So she would like to know more about the NFT art. Do you believe this will be a valuable asset in the long term? Also, I would like to inquire if anyone can create an NFT. If so, how or where? And where are NFTs usually bought and sold? Okay, so there are exchanges for NFTs. You can create an NFT with the proper software. Okay. The future NFTs, I think, is again, NFTs are here to stay because blockchain technology is here to stay, right? So it seems to me that NFT is, as we're saying, a growing market, right? But you must be very careful, right? Because the value fluctuates a lot. So if you're looking at as an investment in NFTs or cryptocurrencies in general, my strong advice is to use a very small portion of your savings and to invest in well-known exchanges like Coinbase and so on, because there's a lot of fraud out there. So be very careful, tread very carefully as you do so. Next, please. We have one more on blockchain. So how blockchain plays a vital role in the financial world? It plays a vital role, or will play a vital role, because of its transparency, its security. Transparency because it is information that is widely held by a lot of people. That transactions are encrypted, so they cannot be erased. And so it's going to bring more transparency, more security, and less cost to financial transactions. I think we have time for one more, perhaps? Yes, I think yes. Let me see. We have two more here in the chat box. Do you think that investing in crypto could be a good investment? My answer is yes, as long as you are investing for the long term and you're investing a small portion of your savings. Okay, that was quick. Maybe, okay. Yeah. So maybe one. Okay, why is the government afraid to accept cryptocurrencies if there is transparency of the technology? Well, there's a couple of things. I think that governments are reluctant to accept cryptocurrencies as, you know, as in Bitcoin, because they have no control over them. So having no control of them can make it difficult in terms of monetary policy for the country, number one. And number two, the lack of security in terms of who handles them, you know, meaning possible criminals, makes it also difficult to go after these criminals. So those might be the two reasons why governments are reluctant to accept cryptocurrency as in Bitcoins or other, you know, first generation cryptocurrencies, I would say. So thank you so much, everyone. Right, I'm sorry we can't answer all the questions. I think our time is up, so I'll hand it back to you, Anna, for conclusions. Thank you, everyone, and thank you, Professor, for this amazing class. It was really, really engaging and interactive. I hope that you guys enjoy it, and remember, this class is being recorded, so you will be receiving this recording in the next few days, probably next week, since today is Thursday. And we want to thank you again to be here with us, to join us, to learn more about this topic, and see what we do here at Hold. We hope to see you soon online again, and maybe on campus next year. I hope to see you in Boston next year. All right. Thank you so much. For those of you who don't know, Frederick is also the dean in Boston. So you might see him a lot if you decide to join us there. Absolutely. So bye-bye. Thank you again. Thank you. Goodbye, everyone. Bye-bye.